All right, good morning, everybody. As usual, we want to check the news, see what was going on around the world. We're looking for anything that really stands out, and also this European market wrap. Kind of get an idea what sectors were moving yesterday. The European markets are still open, but you can also scroll back more and find the Asian market wrap. You can also find our market from yesterday and that wrap to kind of get an idea of maybe a move that happened that you couldn't really explain. Nothing really stands out. There's a lot going on today with central bankers over in Europe at the moment, but that's going to get wrapped up. And then we have a few speakers over there as well. BOC governor. Not a whole lot else on the agenda, which is fine. The name of this morning briefing today is the same one as yesterday, and it's probably going to be the same name for a little while now. And we're actually starting to hear it in other places now. It's inventories. Inventory correction is something that it would benefit you to maybe Google that and look into it a little bit more. Understand a little bit about why they are all talking about inventories now. Now, it's the new thing. It's going to be like how transitory was the word that was thrown around. And it's always something, right? All right, so the agenda today, you can see it's a full house. 8:30, 10:30, 11, 11:30, 1 o'clock. It's the 1 o'clock that I really want to point out and I really want to highlight and stress. You have the 30-year bond auction today. And just like the 3-year and just like the 10-year, there is a lot of uncertainty about how everything is going to work, how it's going to unfold, who's going to step up, and if anybody's going to show up at all. If the Fed ain't buying it, who will? Right? So that is a large part of what's going on. We've been in this range, just holding the range and maintaining this level because there's a lot that the institutions are waiting on. They want some clear answers before they proceed forward. And so the algos are just doing their job. They're staying hedged and just bouncing the levels back and forth. We get ECB Friday, and that's going to be a big one. And then we got FOMC the following week, right? So it makes sense that we're not really expanding beyond these levels yet because they don't want to commit capital. And I can't blame them for not wanting to commit capital. We wouldn't want to either, right? If we don't know what's coming at us. Levels today are pretty simple. Yesterday's RTH open is what we just bounced off of, that red line. $41.41. Globex open 41.16. If we were to do half of this ADR, it would be 41.64. If we get the entire ADR measured in one direction, it'd be 42.13. That puts us right up there at that cog line, 42.11. Still not at the expected move top. Same thing to the downside. 40.67 is half the ADR. 40.18 is all of the ADR to the downside. And that also would not get us to the expected move bottom at 39.58. Now, to hit that ADR on either side, we would have to leave this range that we've been talking about, right? In fact, the top of this range is half of that ADR, and the bottom of this range is half of that ADR in the other direction. The entirety of that, that's two halves, you get a whole, right? So if the ADR is 2.36 from that red line at 40.64 down to this red line at 40.67, That would be all of the EM or all of the ADR starting right at our close. And that matches the high and the low of the range that we're looking at. So if we expand beyond that, things are liable to get a little out of control. Take a look at the daily chart. We did have that consistent, persistent move to the downside. We built that base along those lows. We've come up off of those lows and we set a higher high. But that's it, right? And then we are just, notice it's not just that we are staying in this range and that we are compressed, because this would be all of that range and we're inside it. Yay. Okay. Yeah. Narrow it up a little bit and realize that it has been getting smaller and smaller and smaller. And that's not necessarily a bad thing either. But the market is very similar to nature. And in nature, you cannot contain energy without letting something out. It's why we have bleed offs at dams and things like that. You have to release energy or it'll blow up. And the market, when it is running sideways like this, is building up energy, more and more and more energy. And these ranges are getting narrower and narrower, which is lowering the volatility out there. And there's actually been some put buying in the last few days, which we haven't seen in a while. The institutions aren't hedged. I was talking with somebody about this yesterday. They're not hedging. They're all out there on the street saying they think we're going to go down. There was just a new analyst estimate of 2,900 for the end of the year on the SPX. They're all talking about we're going down, but none of them have been shopping around and buying puts and loading up on insurance. If you think you're in hurricane season, you think you would buy hurricane insurance. Well, if they're all out there chipping their teeth saying they think we're going to go down, how come none of them are buying puts? How come none of them are hedging? It's a fair and honest question. But we started to see a little bit of that in the last few days. The VVIX is up. I think we're going to see the skew start to come up. Skew is the recognition that put buying activity is happening. And we'll start to see that turn around. You're not going to see it in the VIX. Right? The VIX has been so complacent, and it's been so complacent because we're not doing anything. VIX is a part of movement, right? Volatility is a fancy word, a nerd word for movement. We're not moving. The moves are getting smaller and smaller. The VIX is not a reflection of the risk right now. But we're primed and ready to go. You get DeMark indicators on toss by loading them using setup, open shared item, import study. That's how you get them. You just have to find them. I think I have some DeMarks in my Thinkorswim Discord. When you're in the Discord for the Thinkorswim, go to the upper right corner, type in DeMarks, and see what you find. If you don't find them in my Discord, go to Google, type in Thinkorswim DeMark indicators, and see what pops up on Google. You would be surprised at what you may find. I like free. Don't buy any indicators, by the way. Some company selling an indicator, it's probably because they can't trade. Or if that indicator was so great that it's making money, why are they trying to sell it to you? Why are they not just using it, making money? My own opinion. And nobody cares about what my opinion is. Are they accurate? Well, if a tape measure is what you would consider accurate, then yes, they're accurate. Don't you grasp that logic? If it's a 21-day moving average, is that accurate? Yeah, it's averaging up the last 21 days. If a DeMark's moving average is averaging 21 days the way it's supposed to, then it's accurate. If you're looking for some indicator that's going to tell you to buy now and get out here, yeah, right. Good luck with that. If there ever was such a thing that actually worked, everybody in the world would use that. Don't buy indicators. Look at the size of the range. Back on topic. It's very narrow. We did drop off most of that price action from back here. Today, we ought to drop off the rest of it. And then this range should widen out considerably. We are above the point of control. We do have the value area high and low over our head. And it is important to recognize the shape of the profiles. And I think that the TPO profile does the best job of that right now. It's a P shape profile. There's P and D and capital D and B, and every one of those has connotations that go with it. So when you're learning and studying about volume profile and TPO, recognize that there are shapes, and that those shapes, whether it's a capital D or a capital P or lowercase b, they mean something. And then, of course, you've got like your capital B. And it's worth learning and digging a little deeper into. The 5x5, 5-day, 5-minute. Looking at today's profile, we are outside the value area. When we're outside the box, we usually have the expectation that we're going to come back into the box. We do have the value area high over our head, which it looks like if we didn't hit it, we sure got close to it. There is no untouched point of control worth marking out, because even this one way back here was hit here and there. So we don't have any of those to carry forward. In today's price, though, we do have all of these pivot points. It's the same pivot points that we talked about yesterday. Institutional pivot points. Open, high, low, and close. And then you can take that out to a daily and a weekly, right? So it's the daily high, daily low, daily close, Globex high, low, close, cash open, Globex open. But there's also the weekly high, weekly low, weekly close, last week's high, low, close. When you mark all of those out, one thing you're going to get is a chart full of crap, right? It's going to be lines everywhere. But two, you will also have these levels that you can use like benchmarks or signposts that you get there. Now what? Did we make it through there? Did we pause, reject, hesitate at that level? Watching the dome as we get into that area, right? Seeing how the bid ask spread reacts and the defenders that are trading on the bid and the ask. Those levels become value. So sure, you'll get a lot of lines. You'll get a lot of lines. But those lines are not handrails to lean on. They're not a spot where we think price is going to get there and bounce. Price is not supposed to turn at a pivot point. It's supposed to go through the pivot point first. If it's going to do anything else, it's still supposed to go through the pivot point first. The liquidity is on the other side. So if you add those pivot points to the pivot points we already have, you will have a very clean, mapped out idea of what we're going to deal with for today. Recognize right now we are inside day. The entire situation is getting narrower and narrower, right? It's a fun word. We're going to be looking for an inside day breakout. If you attempt to trade today in this narrowed range, you're likely going to have difficulty doing it. I'm not here to tell you not to trade. Some people like trading range. There's nothing wrong with it. And if you get to a small enough time frame, even range has trend in it, right? Bookmap, Jigsaw, they got 10-second charts. You can find some very beautiful trend even in a range day. I probably won't be trading it in the futures. I'll most likely use options and do something like a 0-day or in some other way participate in this. Because if it's a narrow range that isn't really giving me a lot of movement, I would rather trade something that doesn't need the market to move to make money. Makes perfect sense to me. And I'll wait for a day where we actually are moving again. And the best part is if we break out of this inside day, where we're very likely going to make some sweeping moves at that point. Just set an alert, trade something else, until you get the opportunity that you're looking for. When it comes to custom indicators, especially on Thinkorswim, guys, never trust Thinkorswim. Pull a Reagan on that thing. Trust but verify. You can lean on them. You can anticipate that a 10-day moving average customized is still a 10-day moving average. But validate, check, always check. I code Thinkorswim. I do a lot of coding on Thinkorswim. And sometimes that junk just doesn't work like it's supposed to. Randomly, it'll just quit working and do something else or not do anything at all. So make sure you always know how to calibrate it, how to check it. All right, for the Nasdaq, yesterday's high and low are marked with the yellow lines. So the top side, yesterday's high 12,783, yesterday's low 12,580. Just rounded it a wee bit. The close 12,625, half the ADR 12,829 to the upside, 12,420 to the downside. That's half the ADR though. And if we were to encompass all of the ADR from the close to an entire ADR move to the upside, 13,034, and to the downside, 12,215. That would get us outside of the range that we've been talking about because the Nasdaq also has that range. And it is important to realize that just like with the ES, it is a range that is getting narrower and narrower. Mas narrow, right? He's getting skinny. Each day is inside the other day, is inside the other day, is inside the other day, all the way back. When we break out of this thing, oh boy, gonna be like putting Wile E. Coyote in the cannon and shooting his butt across the ravine, right? This thing is gonna make a move. When? It could be the CPI on Friday, or it could be when the Fed comes out the following week on Wednesday. I don't know. The guarantee, and there is always this guarantee, 100%, without a doubt, we will not stay here. And I think as simple as that sentence is, it gets overlooked way too much. Guaranteed, without a doubt, we will not stay here. We already hit the value area high and had rejected from it. It's worth marking now since it was just a value area high, but now it's a value area high with some volume nodes there. No point of controls to carry forward. Very, very narrow profile across the top. We are inside, but we're about halfway through it. The resistance in this thing is all underneath this, right? Call it resistance, call it support. All of the volume that we're looking at here, the point of control, any validity, any help, it's underneath the market at this point. What do we do with that? In a move to the downside this morning, we would anticipate a little bit of help off of yesterday's lows. Should we break through the low here, marked on the value area low, 12,487, there's not a lot there to catch us. There's not a lot of support down there to help us out. 12.3 has a little bit, but when we get this kind of move and it's one-sided price action, levels get annihilated and it'll just move right through them like they never existed. So in a move to the downside, if we were to break these critical levels, I do not see that little bit of assistance is going to slow it down. Still don't see the move happening until at least Friday. Now, that doesn't mean that we can't break the level between now and Friday. Just that if we wick a little higher or we wick a little lower and then we come back inside of it, that wouldn't count, right? We're talking about a significant liquidation break to the downside or just a straight up rip your face off rally to the upside. And this spot here where we did break out of it, that was holiday, right? We ran into the close on Friday, and then on that shortened Monday where we opened Globex Sunday night and then closed like a small Monday time frame. That Globex bleed up is where we got outside of the box. We got some green, we got some red, we got a little bit of wishy-washy market out there. Makes perfect sense. What we had been doing a lot lately is if something was really red yesterday, we'd look for it to be green today. And if something was really green yesterday, we would look for it to be red today. But with this wishy-washiness out there, we're now starting to get this bleed over where in the mornings we've got a mixed bag of half and half, a whole lot of nothing. This is kind of why one of the rules that I use is it needs to be at least a half. It needs to be up or down at least a 0.5%. And that way we don't get too caught up in things that are only slightly up or slightly down. Airlines, Bitcoin, technology. Financials are really important right now. So keep your eye on those. And things that are down, emerging markets and silver, natural gas, gold. We use emerging markets for a gauge of risk on sentiment. And so seeing that down kind of implies that global sentiment is in a risk off mood or a risk off attitude. Crypto names are up this morning, but keep in mind that those crypto names don't necessarily reflect a particular coin. A lot of these names just happen to be heavily vested in blockchain and or own a lot of coin. Commodities are down this morning. But the EV markets are up, except for the ones that were up, right? The other day we were talking about XPEV and Li Auto and NEO being up while the others were down. Now we flip it over, just like we were talking about a few minutes ago. The ones that were up are now down, and the ones that were down are now up. Mean reversion, linear regression, least square methods, take it back to the mean, right? Not much of a surprise there. Gave the shout out on the Tesla play there on that liquidation break when I was doing my lunchtime review or midday market review, looking for the opportunity. The call out was think of a high beta name, something like 2.5% fast beta, and seeing the S&P coming through the backside of lunch finally start to make a move. Well, we were at the top of the range, so if we were going to make a move, we were either going to break out of the range or begin to drop. So find something that was already up significantly on the day with a high beta and short that sucker. That would have worked out for you really good if you'd have done that yesterday in Tesla. I published that at 11:30. A little sooner than that. my time, which would be 10:30 my time, which is what this market is showing, would have been right in there. So right before the big break. It's what you want to be thinking about today as well for your afternoon session. By that point, we'll be at the low of the range, the high of the range, hopefully, right? And we won't be sitting right in the middle again. And then ask the question, what are we going to do with it? Break that range and go up, or give it all back and go down? And if you think we're going to go down, find the names that are up the most that day, looking for short opportunities. There was a large discrepancy yesterday with the S&P and the Nasdaq, and the discrepancy came from the financials. Really keep your eye on those things, right? The financials is a really great indicator. The way that I use indicators are completely different than the way a lot of other people use indicators, but this is an example of my indicators: Bitcoin, gold, bonds, the dollar, the VIX, oil, HYG, XLF, KRE. Looking at these markets give me a better understanding of the entirety of the market, what's going on out there, so that I'm not sitting there trying to put on a trade in AMD, having absolutely no idea what's going on anywhere else except that AMD chart. Right? Look around. Don't just stare at the one thing you're trying to put a trade on. And then complain when you get ran over and say, I didn't see that move coming. There is times where none of us can see the move coming. But if you don't look around, I promise you'll never see it coming. It's all about inventories right now. There was some numbers put out. I believe that it's like 33% in Walmart, 40 something in Target, and Kohl's, or maybe it was Macy's, but I think it was Kohl's, is above 50% in their inventories. These are like record numbers. It's the catchphrase, it's the word of the day. You're going to be hearing it all over the place in the next week, 2 weeks, 3 weeks. It's all about inventory correction. Quote, quote. Again, feel free to Google that. You'll learn a lot about it. It's worth kind of grasping the logic behind it. Speaking of Target, they did come out with a dividend increase this morning. So after already taking that beat down, they decided that they're going to increase the dividend. There is still rumor going around about Netflix Roku. It would be one of the biggest and first real purchases that Netflix has made, because they have bought others, but it's been negligible, small little absorptions. This would be like a step up for them. They would be getting into new territory. So you want to continue to keep your eye on that as well. Energy and finance, guys, that's been the plays. I don't see that it's going to change today. Everybody be careful and have a good one. I'll see you all tomorrow.